when you start seeing the short-term holders dropping, you see long-term going up, and that when you see this happening, that is normally a good indicator that we're going to start one hell of a bull market. And then once it's overextended, and then you see the long-term holders starting to shrink and the short-term holders coming in, that is a good indicator of a bull market. Hey boys and girls, Siam here. So I'm currently on holiday in Costa Rica, and it's blistering. I mean, it's amazing. I'm never going back to Spain ever again. The people here are friendlier than the Spanish. The weather is scorchio, and yeah, it's pretty cool. Except the hotel's full of really rude Germans and Russians. In fact, are there any other nations I can piss off in this video? So yeah, wife is on the beach, kids are being entertained. So I thought I'd get a little update out. So I made a pretty in-depth one for my students, for my trading community the other day. And so I'm going to abbreviate this as much as possible and get it done in a few minutes. I'm going to hold the phone as close to my face as possible so you can hear me. It gets pretty loud here. So I want to talk about the difference between trading, investing, and I guess the framework from which you base your actions on. Now, in my book, from where I see things, trading and investing are two separate things. Mainly separated by time. So if you're doing anything with a 6-month onward time frame, oh, interruption, ooh, pause video, I'm back in the room. Okay, every now and then the kids keep coming up. So yeah, if you're doing anything from 6 months onwards, that's investing in my opinion, and anything less than that is trading. And obviously when you're trading, you're doing a lot more actions, you're doing way more movements in and out of the market. So let's focus on trading first. So trading, it's easier said than done. All you need is a system with positive expectancy, and then you need to flawlessly execute that system without emotion, without failing, without missing setups, I guess the key word there is flawlessly executing that system. That's all there is to it. Like a casino may be 51% winning, 49% losing. They know they just need to roll as many dice, deal as many cards as fast as possible over a long time frame, and they're going to be in profit. So it's the same with trading. You need a positive expectancy system, and then to flawlessly execute it. And it's the last bit which is the hardest. But once you have it, it's great. And this is why I quite like algorithmic or robotic trading. Anyways, that's trading. Now the investing stuff, this really applies to crypto investors, because I'm seeing a lot of people with zero framework. They're literally swinging from the hips and just effectively gambling. And so with investing, when you're looking at a particular asset, crypto, stock, commodity, whatever, it doesn't matter. But I'm going to focus on cryptos in this one. You need to first of all open up your mind, clear all of your biases, and then explore both sides of the coin. So the bull case and the bear case. An investor, you really need to get good at holding two positions or two ideas in your head at the same time. So you first of all explore all of them, and then you need to apply a weighting, like a weighting, as in a weight, heaviness, and a probability to all of the things. So let's say you look at the bull case, okay, and you go, okay, the pros, or the bullish case for this is this. You then need to assign a weight to each one. Like, is this one more important than this one, etc. And then you need to again apply, as best as you can, a probability to all of these things happening out. Okay, so that's the bull side. You then do the same for the bear side. Okay, then all of a sudden you've got this seesaw, and when you've applied the weighting and the probability to both sides of the coin, you can see which way the seesaw is going to go, up or down, etc. And then that'll really help you whether you're bullish or shortish, bullish or bearish. The sun is so hot, my brain's barely working. But as well as that, so you may be like bullish, but you then have to break it down into time frames. So are you bullish short term, medium term, or long term? And you're going to have three different things. So if you take crypto, let's take Bitcoin for example. I'm insanely bullish long term and medium term. Short term is a bit of a crapshoot, and it has been a bit of a crapshoot for the last couple of months, because catching the bottom is a precarious activity. And so for a long time I've been bullish, medium to long term, but cautious, somewhat bearish, short term. And so you're going to have different actions based on, whether you're bullish or bearish on the different time frames. And then you have this confidence rating. So I know I keep looking over there, it's because people keep walking and I keep thinking Ellie, my wife, is going to come in and go, you should be playing with the kids, not making a video. So let's say you are bullish on something, and let's say you're bullish at something short term. You then need to have your own personal confidence in how bullish you are. So again, this is all rather subjective here. So what I tend to do is I only make a move if I'm 65% confident or more. Okay, so typically whenever I have a leaning towards a particular direction, I tend to, I'll only move when I'm 65 to 80% confident. If it's less than 65%, I'm like, I think it's going to go up. I think I'm bullish, but it's a bit iffy. And so I do nothing. And doing nothing is a position in itself. Sitting on your hands is often the best thing you can do. And it's very rare, very, very rare that I'm more than 80% confident. So for example, my students know this, a couple of weeks ago when I saw ADA, so Cardano, smashing back down to $1, I said I was 90, in fact I put this on YouTube, I was 95% confident that we'd have a strong hard bounce from that $1 level. And I cannot remember the last time I've been more certain on anything than that for best part of 5 or 7 years really. And guess what? ADA did a hard bounce from $1 and it's now like $1.45. So when I do have high certainty on something, it's pretty accurate. So you then have the confidence action. Now you'll never ever be 100% on something. And I know someone once said, the other week, so why were you not 100% confident in ADA bouncing from that? And the reason is that we are the retail market. You and I, we are plebs. We are literally mere mortals, and we live in a world where there is asymmetric information. Okay, we don't have all of the data, and the data the retail world gets are basically the dregs. We're scraping the barrel. We've got the lies, deceit, the FUD, old data, and so we are constantly, trying to guess what the big boys are doing based on the data that they may have. So you just don't know what you don't know. So you can never ever be 100% on something. So so that's that. And I guess in a nutshell, so you need to basically explore both pros and cons of either side of the coin of something. You then need to apply a weighting / probability to those things happening. You then need to know whether you're bullish or bearish, short term, medium term, and long term. Then you need to have a confidence rating, so how confident are you in this, and only move when you're sort of 65% or more. And then the very last thing is that when you are wrong, you need to be able to pivot. You need to have zero ego in the market and be chronically aware that you are trading or investing to make profit, not to be right. Okay, and this is where blokes really screw up with playing in the markets. Most people on the markets are dabblers, and most of them are blokes, and there is ego and testosterone, and so they prefer to be correct and right on something, and they feel that they have egg on their face when they say something will happen and it doesn't. You need to be the opposite of that. So there are numerous times where I've said something's going to happen and it doesn't it goes the other way. And then I get trolls on Twitter going, you're an idiot, you said it was going to go up. But then what they don't have is context, or what they don't, one, they don't have access to my Telegram group. So they won't have known that I went, oh shit, I was wrong, and pivoted. So that's the key thing. You need to be able to pivot on a sixpence the second you know that you're wrong. And when price action, when the market starts moving in a direction where you're like, oh, that shouldn't have happened, you need to rapidly, reassess the situation, and then try and figure out what the hell you missed. And then if you can do that really quickly and then pivot your position, whether you get out and sit on your hands or reverse the position, you're going to make money. So, bloody hell, it's 9 minutes long. I really could have gone on for an hour just on all of this. There's so much more I want to talk about, but I want to keep it to less than 10 minutes. So hopefully that helps. If anyone's curious, I'm all in crypto. All my entry orders are gone. I've been filled, and I'm in. Although it's full on bullish at the moment, I'm still expecting one bit of a pullback. We haven't had crazy pain yet. And crazy pain will be, Bitcoin go from sort of $45,000 back down to 35. That's going to really screw up a lot of people. So guess what? The market always does the thing that's going to screw over the most people. So I am expecting one little thing down. However, I'm fully back in. And one last thing. Adding into the whole mix of everything, when I said short-term, medium, long-term, and your weights and probabilities, you then, I think this is probably one of the key things here, you have to identify what type of analysis you're doing. So if you're investing, you need to have your you need to know the fundamentals, you need to know the technicals, what is price action doing, what are the charts doing, and the new emerging sort of field in crypto is on-chain analysis, and I think on-chain analysis is invaluable. I'm rapidly learning this because it is new, but it does give you some very good insights into what's happening. And one of the things we're seeing right now with on-chain analysis is that the long-term holders are increasing and the short-term holders are buggering off. So if you see that the short-term holders and the long-term holders are inversely correlated. And what happens when you start seeing the short-term holders dropping, you see long-term going up, and that when you see this happening, that is normally a good indicator that we're going to start one hell of a bull market. And then once it's overextended, and then you see the long-term holders starting to shrink and the short-term holders coming in, that is a good indicator of a bull market. So when I get home from Croatia, I'm going to build like a bit of an indicator, because if you can displace that if I will go into details, but that is a good. So hope that helps, and I will see you all soon. And happy. Oh, sorry, one more thing. One of the most effective methods or investing methods you can do with crypto, regardless whether you're short-term, medium, or long-term, is to just hodl. Seriously, if you don't know how to trade, don't bother doing anything. Just hodl. Seriously, I cannot stress this enough. Hodling will help you. Super simple as well.